This is Speaking of Settlements. I'm Scott Drake with my guest Kelly Ramsdale with Ramsdale and Associates in Colorado, New Mexico, and Oklahoma. Kelly, welcome back.
Thanks for having me again.
All right, we've covered the basics of structured settlements. What other products do you offer attorneys?
Well, we get so many interesting phone calls. We have to kind of be able to, bring out any product that our clients might need, and some of those might be trust products. The cases sometimes don't work for a structure, and we need to bring in to be able to do a trust for our client. We can do standard annuities for folks when either the attorney has taken constructive receipt of the money, wasn't aware that he wasn't supposed to. We can do, so basically that's a standard annuity that pays right away, or a standard retirement annuity that can be deferred. We are able to do those. We have started offering long-term care insurance for either attorneys or their clients because we've made it our job to keep our clients safe and their money safe over long durations, and so we found that kind of fits in with what we do. So we can do several different things. When a client comes to us for unconditional help or for the non-standard structured settlement annuity, we can try to help them with various products.
And with the instability of the equity markets right now, structures can be particularly useful, can't they?
You could say that, because the number one thing that I'm hearing from folks is security. They want stuff. They will trade a little bit of return for the peace of mind and knowing that their money's not going to go away. So again, whether it is a structured settlement annuity, a non-qualified structured settlement annuity, or even standard retirement annuities, that is a really safe place to put your money these days, and attorneys are all over that. And so I do get calls for any number of those things these days.
Finally, Kelly, let's close with maybe some common misconceptions about structured settlements.
It's kind of funny because I don't hear it too many, reasons why actual people won't want them, because when I meet with them, most people do want them. But some of the reasons why, misconceptions as to why somebody might not want to structure, there are two, I think, that are pretty major. One is there are low interest rates right now, so why would I want my client to lock in low interest rates? Well, they are low, without a doubt, but we are competitive, and it's shocking. A lot of people are shocked that we are as competitive as we are for the risk class that we're in. We're going to pay better than bank products, and the money's not going to run out. Any other product, the money can run out. So, take a moderate interest rate that's going to be paid on a structure, and then don't ever have to worry about it running out on you. The second most common misconception is that anybody who's financially savvy in any way won't want one, which is really kind of crazy, because anybody who's in any way financially savvy might, be a high wage earner, and they're going to immediately appreciate the tax savings or the tax-free nature, depending on the kind of case. If it's a non-physical injury case, they're going to like the fact that they get tax deferral, legal tax deferral. If it's a physical injury case, they're going to really like the fact that they get tax-free money. I have done structures for doctors, lawyers, business owners, professors. I have done structures for very financially savvy people. So it's a really common misconception. I don't know where it comes from, really, but it's out there.
All right, Kelly, thank you.
Thanks for having me.
She is Kelly Ramsdale with Ramsdale and Associates, and this is Speaking of Settlements on the Legal Broadcast Network.